And we're back. It's Wednesday, May 21st. All day. Paul Capetta is here. What's going on, my friend?
Doing great, man. How are you?
I am good. I'm being told by John and the team outside that I've become high maintenance, that I've changed. I used to be, I guess I used to be a more humble guy, but you've known me now for 3 years. What do you think? Do you think better or worse than 3 years
you're
ago?
Absolutely high maintenance. No, I'm kidding. You're fine. You're fine. No.
I appreciate it. Yeah, we're just trying to make sure that everybody can hear and see this. I'm getting a haircut this week. You already got a haircut.
Yes.
You're blasting off to Charleston. Wait, Nashville.
Nashville. Yep, Nashville for Memorial Day weekend. Weather is kind of iffy.
Okay.
I think it's iffy all throughout the Midwest right now. So
Doesn't look like it's going to be a fun Memorial Day here in Chicago necessarily. Hopefully it's a little bit better in Nashville. What goes on in Nashville over Memorial Day weekend?
all sorts of things. Well, golf definitely on Friday because they're ringing our clubs, taking advantage of the last 2 bags fly for free with Southwest. They got rid of that, which is a shame.
Okay.
So doing that, and then just exploring, going to different places, live music all over the place.
Sweet.
Hopefully enjoy some nicer weather.
What's the big place? Aldean's? Is that
There's so many big bars, and they change. Like I was there last year, and I think there's a new big bar.
I remember the big boom for Nashville was like obviously for so many cities like Nashville was coming out of the pandemic. So it must have been like 21 or 22.
Yeah.
And I remember reading like a big think piece. I enjoy music a lot. I used to do a lot more research, hovering over Pitchfork and everything else. And they were just commenting on, how many new music venues have popped up in Nashville, a town known for probably similar to like Memphis and these other places, and even Chicago maybe like 30, 40 years ago, where it's like, oh, you go there and there are like some small clubs, and you can get like some real, Nashville country. And in Chicago, you could get some real, Chicago blues or whatever. But now it seems like they've blown it out. Now it's like the idea of a small club, but on steroids, like 3 levels, 5 bars, like 3 different acts going on at once, like crazy stuff.
Yeah, it's usually like 4 or 5 floors of place. You're walking upstairs. You're trying to find which place has the best live music. Go sit down. Which place is not too crowded. It's fun, but you can find out anything you want basically as far as listening to music. You can have more of that kind of club traditional bars there, so they kind of cater to all people.
Very cool. All right, well, if you're in Nashville, look out for Paul. He's going to be, I'm sure, like a hurricane throughout all the clubs there. And if you see him, buy him a drink. Anyways, let's get into the platform because markets are moving. We have a fun segment to do in just a little bit. Check in on the Turkish lira, which is often a more funny, I shouldn't say funny, a more interesting concept than it is maybe a practical trade. But we'll dive deep on that in just a couple minutes. Before that, I do want to look at the dollar price action because it's more of the same coming from yesterday, Paul, but it is a little different. Pete and I jumped on Monday and took a look at some of the U.S. dollar pressure that was building, obviously coming off of the credit rating change over the weekend. And you're seeing continued U.S. dollar downside. You're seeing continued pressure on U.S. treasuries, which and if you didn't check it out, go check out Monday's show because Pete does such a great job of highlighting the difference between when higher interest rates are bullish for the U.S. dollar, which in 9 times out of 10, that's kind of the scenario where it's like, and it's not just the U.S., right? It's economy XYZ is, running kind of hot. Their GDP is hot, but their inflation is hot and a couple of these different things. And so they need to contract a little bit. They're going to hike interest rates. But if it's a U.S. or a Japan or a UK or Euro area or even in Australia or New Zealand, there's such great confidence in the economy that like the higher interest rate means, I'll park my money in that currency, get that higher interest rate against somewhere like for example, Japan has had low interest rates for the last decade plus. This is a little bit of a different thing where right now the market is pricing in higher interest rates for U.S. Treasuries, but because there's a little bit more fear given the credit downgrade. And so it's not necessarily that kind of one-for-one higher U.S. rates, higher U.S. dollar. If anything, it's actually higher U.S. Yields for those treasuries because of some fear in those treasuries and fear in U.S. dollar that's leading to downside.
Yeah. There's a little bit of a fear in the U.S. economy, too. I mean, I think Target released earnings this morning that were a little bit weaker than expected. Obviously, inflation is still sticky.
Yeah.
It hasn't came down as much as I think we'd all expect by this point.
Mm-hmm.
So that's part of it. And then, kind of the uncertainty of the tariffs. I mean, I think what are we, June, July, sometime eventually we're going to get a new tariff date.
I couldn't tell you.
No idea. Like, no idea.
Which isn't like meant to be like pejorative against a tariff. Whatever you think about tariffs, whatever. I have no clue because it's been changing.
Yeah, it changes too much, and we kind of deal with it on the fly at this point as far as kind of traders.
But that's a good point. That equities lower, and equities have been moving back and forth throughout the week. It's not been as direct a correlation as we're maybe seeing with Treasury prices and U.S. dollar prices. But you do have metals moving higher. There does seem to be some overarching rising fear across a number of markets. But what's interesting, Paul, is one, it's ping-ponging back and forth. You look at the prices here, and you are actually now starting to see the yen and Swiss franc kind of emerge as the currencies that are more consistently beating up the U.S. dollar. Monday this week, the biggest movers against U.S. dollar coming off of this credit rating downgrade was Australian dollar, New Zealand dollar, which really surprised me. And then obviously the Australian Central Bank comes out and cuts Monday night, which I think was expected, but the market digested it as pretty dovish. Aussie gets slammed, and I don't need to just talk about it. I can show you it here. You can see here's the price action coming off of that cut here on Monday night going into Tuesday. Sorry. Where am I? No. I'm right in here. Here's Monday night going into Tuesday early morning. Off of what was a really nice Australian dollar rally on Monday off of this U.S. credit rating story. Now Aussie fighting back a little bit, but pretty much around unchanged on the week. You go over to this dollar Swiss franc in the same time frame here coming off of, this is the open on Monday night, and it's been much more consistent downside in U.S. dollar here against this currency, while it wasn't necessarily the biggest mover on Sunday night into Monday. So interesting to me, Paul, we're now midway through the week. Fear, if any, I don't think fear's subsided at all. If anything, it's kind of ramping up. If you're looking at gold prices, if you're looking at equity prices, if you're looking at U.S. dollar prices, bond prices, not really showing you that fear has subsided, whether it's this story or whether it is impending tariff stuff, if that's meant to kick in next week or whenever. What currency are you looking at here now that we are midweek? Because I do think it's interesting with this Swiss franc, given the consistency of downside now throughout the week, and now we're staring at that 82 even, which is a price that we traded through for just a handful of days going back the last several years.
Yeah. I mean, the Swiss franc yen, this is just a straight risk-off trade. This is where if you get this fear gauge, whatever your fear gauge is, if you get a tick up in fear, this is where you're going to see a lot of dollar pain. I mean, yen rallied up to really 148.5 and it's pulled all the way back. We're almost 500 points off of that. So that is, that's a significant move in about 2 weeks' time. So, yeah, there's a lot of places to look. Yen and Swiss, I think, are kind of your easiest risk-off type trades. Obviously, there's other dynamics, especially with Japan, that can come into play too, especially if the tariff situation gets really kind of hairy with Japan. Anything's on the table on that standpoint. Outside of that, I mean, the euro area does look pretty strong right now.
Gosh,
we're
it's
back.
strong.
Yeah, we're a stone's throw away from 114. We're closer to it this morning, and they've given some of it back already. But that's an interesting one to keep an eye on. 114. I mean, you start breaking through some of these levels, you're going to start talking about historical areas for euro, which is actually closer to 120 than it has been.
Sure.
If you look way back.
Yeah, there's a number of pairs on the board here. I think we highlighted most of them, starting with that Swiss franc. Looking at the daily chart here, very close to prices that we haven't seen for years. You highlight this dollar yen, now pretty cleanly below 145. And you might say, well, that's not the low. Well, this is a pair that has been moving, 75 to 150 points on a given day. Today already it's down 70 points. So very easily could get down to 140, which is, we've talked about this a number of times, is really the low in this major pair going back down to mid 2023. And then, you highlight this euro, which has kind of gotten out of the spotlight in the last couple of weeks, because this was a really nice move from 115 all the way down to 111. And I think we all were like, okay, that story's over. Like, we're just going to now trade this 108 to 112 kind of range. Not at all. Right back up close to 114. And keep in mind, everyone, that if you take these data points out here, 114, that is the high in Eurodollar going all the way back to the start of 2022. So a handful of extremes here. Was interesting. I thought that the commodity currencies were kind of the big movers to start this week. They've kind of subsided. If anybody was doing some mean reversion plays between those and maybe a yen or a euro or a Swiss franc, nice trade already this week. But now you're seeing the extremes really start to flesh out in those dollar pairs against your Swiss franc, your yen, and your euro. We'll see where they go from here. I don't think there's too much economic news coming up. We already had some Fed members speaking. We had UK inflation this morning, a little hot. Doesn't seem to have been moving markets too much. That pound looks to be about unchanged. Tomorrow, we have some European data as well as some UK data, but nothing too big. We've got home sales in the U.S. and then Japanese inflation tomorrow night. That might be something to look at there, especially if some of this fear subsides. But, I mean, look at the net changes across the board, everybody. It doesn't look like this story is necessarily out of the woods quite yet. But let's move over to our slides and have a pretty good time here talking about something we don't normally talk about. Is the Turkish lira finally turning around, Paul? And we're also going to dive into how you might trade this dollar tri pair. We're going to try our best to not give any kind of, and our compliance officer who's watching is probably going to say, well, I hope that you guys do this on every time you jump on the air. Of course we do, but this one especially, not give any kind of opinions or biases. And I don't even mean like, oh, you should be long or short. Of course we're not doing that. But like, you talk to a certain person and they think that this is completely untradeable. Like, this market is, and I don't mean this in any kind of offensive way to anybody from Turkey, is kind of a joke.
Kind of, yes. Yeah, it's the liquidity in it is light, rightfully so. It's a very volatile currency given the economic backdrop that you have going on in Turkey. And I think we're going to touch on it a bit as far as the more historical why this kind of currency pair trades like this, why are interest rates there like this. A kind of all the background on why this is kind of the Turkish lira has depreciated so much.
Sure.
Over the last, since I've been watching FX markets, I don't think it's ever had a up year as far as Turkish lira goes.
Well, let's dive into it, because this chart will kind of tell you all you need to know about why there is a bias around this product. And it's because, to Paul's point, yeah, Paul, I don't think if you're talking about, a calendar year, that this pair has had a down year in the last at least 5 years, going back to 2020. Maybe one of those, 2015 to 2020 years kind of eked out a relatively unchanged to slightly lower on the U.S. dollar part of this equation. But the Turkish lira is down more than 1,000% since 2015. This dollar tri-pair, if you're looking in that bottom left corner, since 2015 is up almost 1,400%. It's up 361,000 points. This is insanity. It's something that doesn't happen in Forex markets. If it is happening in an odd pair, you're usually not going to be able to get access to it, because a Forex provider would probably deem it too volatile, too illiquid, too crazy. This is one that I think people like to talk about because it's on the edge there a little bit. And we'll talk about liquidity and everything else in just a second. But Paul, this is still something that people do trade, and people have opinions on whether it's going to continue on its journey from under 3 Turkish lira per USD to now almost 40, which is a pretty crazy move over the last 10 years. But the stories surrounding this, and maybe you can dive into this piece, it makes sense why the price action has been like that. And also, if you do look back to the 2015 to 2018 range, this is an economy and a pair that can get back to some normalcy at some point. But why don't you dive into what the economic and political backdrop is for this Turkish lira falling so much? We have the interest rate up there in the top right, and then we have the inflation rate down there in the bottom right. Relatively similar journey, but we'll dive in deeper on that. But what's been going on in Turkey, even if you just go back the last 2 to 3 years?
Yeah. So the main thing is what we can, I wouldn't necessarily call it hyperinflation, but it's really sustained high levels of inflation. You think back to the U.S. side when we kind of tackled inflation, why was the Fed was so aggressive at it, is because when you're not aggressive, this is what can happen.
It can go from 5 to 10% to 20% to, at its highest, above 80%.
And when the train gets off the tracks, it keeps going. Kind of with inflation. It's one of the things you learn about in economics, that inflation can get really bad if it's not contained. And they've had trouble containing it. So much so now that I was actually reading an article this morning that about because of the high interest rates in Turkey, about half of the companies that are on their kind of public stock exchange are actually losing money.
Sure.
So, that was kind of I didn't know it was that bad. I knew it was pretty bad, but that was like, Jesus, that's tough to deal with. That's a really tough business environment to deal in. And from an economy standpoint, they haven't been able to turn around for a number of years now.
You're talking about ultra contractionary policy at that point, with interest rates getting up to 50% to try to calm down this inflation. And to Paul's point, the inflation side of this, especially since 2022, has gone from, okay, we're like keeping this relatively stable, and take a look, everybody. Like, you have these periods of 2018 to 2020 where interest rates get up to 20% because inflation is up around 20%, and inflation moves down prior to the pandemic to relatively normal prices for Turkey, which I'm not going to say Turkey and U.S. are going to be different. Turkey and some other major economies are going to be different. But you see, like I say, kind of some normal back and forth between rates and inflation. The real problem that they had here was the massive negative real interest rates that you saw in parts of the 2022 to 2023 range. In this range, you have inflation getting up well above 50%. And if you look at the same time frame, they're actually holding rates unchanged or cutting them. And this had to do with Turkish President Erdogan influencing, let's say, the central bank in Turkey to keep rates low, because he he was going directly against economic theory, thinking that we'll keep these rates low, this inflation will subside, we don't need to hike these interest rates and put, this damper on businesses. Who know? There's take a look. You can decide for yourself, what was going on with his decision making. He's still very much in charge, to the point where not only do you have the economic side, Paul, but the political side doesn't stop at just the central bank. President Erdogan recently had the Istanbul mayor arrested, and he's his top presidential adversary. And I'm pretty sure that man is still awaiting trial in prison as we speak. And that happened, I believe, in March of this year. So a number of reasons for why this Turkish lira is getting pounded consistently year after year against the US dollar. But some interesting things to look at on the economic side, Paul, is finally you do see the central bank give way in the end of 23 and throughout 24, where rates do climb high and inflation does start to subside here to a relatively normal level. Now, I bring that up because the price action in this dollar tri pair has not stopped, but it has kind of slowed down. You have here in the first half of the year, the dollar to lira up another 9.7%, almost 10%. But keep in mind that Turkish lira was down more than 20% last year, 50% in 2023, 40% in 22, and 80% in 21. And so if you're talking about kind of just the rate of change, it has slowed a little bit so far this year. Again, we have no clue. And here, this is the move around the arrest of the Istanbul mayor. And so you have that going on as well. That's like a completely unknown risk aside from inflation, interest rates, and everything else.
Yeah, the political instability risk is kind of really high in this one. But it's interesting to see that the kind of price movement has slowed down a bit. I mean, we're about halfway through the year at this point, so if it continues on this path, all else being equal, you get 18% weakness, maybe, outside of something crazy different happening, which is, in case of Turkey, is totally possible, right? But yeah, it's crazy. I mean, the weakness. I mean, just like 9% currency move in a rather large economy is pretty big.
Is pretty massive. Yeah. Let alone the 80% in 2021 and 50% as recent as 23. Something that we do have to dive into, because the Forex heads at home might be saying, well, you're telling me that these guys have had, 40, 50% interest rates. What does that mean for the carry trade? Now, keeping in mind that interest rate differentials tend to run this carry trade, but there are liquidity parameters that can kind of mess with it, and these are indicative prices here. All of that being said, you take a look at this dollar try here in the middle of our table, and you can get this information from tastyfx.com or the tastyfx platform, and you see here a swap bid, Paul, of almost 400 points. What does that mean?
Okay, so you're going to get 400 points, about 360 points, to hold this position overnight.
Hold it short.
Hold it short overnight. And if you're long, you're going to pay 400 points.
Yep.
So you have to take that into account into your decision making, especially given the kind of sustained weakness we've seen in the lira over the past 3-4 years, right? So what that comes down to, with dollar try trading at about 38, we'll call it. If we round up to 48, it's about $250 a point, which means if I am holding this overnight, I'm getting anywhere from $800 to $1,000
per one lot. And so this is the dynamic that, like, going back to the chart, you might say, like, oh man, this is just a stair step higher. This is the easiest long of all time. Well, keep in mind that if you're long dollar, short lira, you are getting in 4 to 5%, and you're paying out, let's take a look at the interest rate again, more than 40%. Now, if you're short and you're taking the heat on the price action of this, and take a look at that bottom right, for example, this is a pair that's moved 34, what would call that, 34,000 points here this year. Okay, so if I'm short, I'm down 34,000 points from the price action on the year, but I'm up whatever. Again, this is just the prices from right now, so this is a hypothetical, theoretical example. Almost 400 points times the number of days in the year so far, which I think we did the math on just ourselves yesterday, and you'd actually be up slightly.
Up slightly.
If you got 400 points every night in this pair.
Yeah, that's very back of the napkin math that we were doing in the office yesterday at the end of the day. But I mean, the other key thing to this is these swap bid and offers actually move quite a bit more than a lot more.
I checked them this morning, and the ones from this morning versus yesterday, very different. Everything's very different day to day.
Day to day, very different. What the liquidity providers are saying, what's happening in Turkey on the ground, it's constantly moving. It's one of those ones where if you were asking me in the morning what the swap bid and offer is, and I could tell you at the end of the day, it might be totally different.
Absolutely. And I love that you bring up the liquidity, because let's end here. This is a super interesting story. We're going to watch it develop. At some point, you would imagine that this USD tri-pair does stop just moving higher day after day, week after week, year after year. We have no clue when that's going to be. You have the interest rate differential in the carry trade. That's, an absolute thing that Forex traders are looking at, and some people are in there trading. But what you have to keep in mind is that this is one of the most illiquid currencies that you can trade. When we're looking at minimum spreads here offered by tastyfx, it's a minimum spread of 50 points. And if you're looking at margin requirements, it's, I think, the highest that's offered. 25% margin requirement, which is very high for Forex pairs. Those overnight funding rates can change drastically. The spreads can be hundreds of points to buy or sell this pair, and of course the kicker being Turkey's political instability. Interesting stuff. Hopefully it's something that the liquidity gets better, the price action gets a little bit more diverse, but for now, an interesting story, maybe not one that you jump in consistently to trade. Paul, thanks so much for joining me here. He's here every Wednesday, Paul Capetta. Everybody stay tuned for Tom, Tony, and Vanetta coming up next.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Regulation time may have expired, but the conversation is just getting started.